Zoom, obviously, because I'm the,
Yeah.
but so a big thing, it's a huge misconception right now. Loan level price adjustments have been around for a long time. We have to remember that. So like loan level price adjustments are, how much money is someone putting down? There's a loan level price adjustment for that. What's their FICO? There's a loan level price adjustment for that. Are they holding escrows or not? Right. So there's a loan level, which you have to put 20% down. There's a loan level price adjustment for that. I honestly, from a lender standpoint, I feel like they just decided on Sunday at 3 p.m. that they were going to like push all of this stuff out into the
Mm-hmm.
world and make everyone panic, which, as we know, news and whatnot, and that's a whole different story, but they're really good at doing those things. So
Yes.
um it's hard though, right, to explain it, but it's on conventional mortgages. And I think that, like, one thing that you've said and a lot of my referral partners have said lately, which is promising, because we talk about it, and I love that I work with agents that say this, is that sometimes FHA is not because of qualification purposes, but is because
Mm-hmm.
it's financially the best choice for the client. And I
Yes.
think that's so reassuring. And I'm hoping that more agents and more people in our industry on both the mortgage and the real estate side start recognizing that as well, because I think that will be extremely helpful. Um, I think that, yes, that there are consumers that only qualify for an FHA loan for whatever it may be: lower FICO score, debt to income, derogatory history in the past, credit wise. There's multiple reasons why. But I also think that a good lender and a good lender partner to their agents always is going to do what's best for financially for the client.
Yes.
And that may very well be looking at FHA loans versus conventional loans. I also think it's important to recognize with these loan level price adjustments that, I've heard people say, oh my gosh, people are going to run out and tank their credit now in order to get a better interest rate, right? Or, uh, and
Yes.
it, yeah, you know what? It could very well happen. I think it might, honestly. But
Mm-hmm.
there's only, at the end of the day, pricing has always been this way.
Mm-hmm.
There's common misconceptions that, though, if you're putting 20% down and you have a credit score of 760, you're going to get the best rate. Think about it this way too, from a lending perspective. If a client's putting 5% down on a mortgage, conventional, it doesn't matter, but
Mm-hmm.
any mortgage for that matter, as opposed to 20% down, the amount that they're financing hasn't mortgage insurance. There's extra costs that they're paying, right, on a monthly basis, on an annual basis. Their APR is going to be higher. All of that goes
Yes.
hand in hand. So I think in my opinion as a lender, I'm not losing sleep. I'm not losing
Uh-huh.
sleep because I'm continuing to do what I do every single day, and that's having my buyer consults with my clients, focusing on what their payment is and what their budget is.
Yes.
And I honestly think, Willie, that it's going to be more difficult, as it
Mm-hmm.
has been. It's been difficult for us all. It's not easy, but
Yes.
I think that, and I have seen it, or more so, a lot of my colleagues, unfortunately, have seen it. A lot more rate shopping, right? A lot
Yeah.
more, because everyone now is going to be turned into real estate and mortgage gurus, which they already were, but that's a different story. Um,
Yes.
and I think that we're going to see a little bit more on that. But my only ask is what you and I do very well, is that triangle of trust we always talk about, right? Is
Mm-hmm.
hey, you're shopping, that's cool. Give Rachel a loan estimate. We run into this often. She'll explain it to you. You know what I mean? So
Yes.
my personal opinion, this is nothing. This isn't going to start foreclosures. You know what I mean? This isn't going to force people into a foreclosure market. Um, what I worry a little bit is, I know my agents, when you guys are generally looking at offers, it's common, especially in a highest and best situation, that you're going to look at the highest and the
Mm-hmm.
best. And sometimes the best is the best terms. Well, if we're going into a place where it might not be financially beneficial for a client to put 20% down anymore, what's the best terms? You know what I mean? So I just think that all of us in general just need to retweak our minds a little bit.
Yeah, no, and that makes sense. Even to that point, as a agent or listing agent, when I'm looking at terms of highest and best, I'm not even always looking at, oh, this person's putting 20% down as opposed to 10% or 5%, because I don't always necessarily believe like that's the best offer, because I also know, and I was a recent buyer myself too, is maybe this person wants to keep some money in their pocket so they can do home improvements or just different things after purchasing the home, or they don't want to be house poor or anything like that. We're coming off of these 2+ or so years of people just throwing tens of thousands of dollars at offers. So in some ways we're getting used to this, like how much money, how big of a bag can you bring to closing, to close this deal. So as our industry is making certain adjustments and transitions, whether it be how the housing market is and how the lending market is, as we have to kind of get back to where we were, and knowing that, okay, sometimes a good offer is just 5 or 10% down. Sometimes a good offer is just a nice, clean, solid offer. FHA is not bad. Like I said, I'm a recent buyer who purchased FHA, but my credit score would allow me to do conventional. It's just, to your point, it just made more financial sense for me to do FHA. But that shouldn't be a negative thing, if you will. So I guess even one of the other big questions that, I've been seeing people talk about or post about too is, people with a good credit score. And, we can all debate on what's considered a good credit score, because that's a whole nother economical situation. But maybe somebody with over a 640 or 680 being charged more, what does that more look like or mean? And also people with a lower credit score, or who maybe only qualify for FHA, like, what is this intended to do? Is it intended to even the playing field, kind of make the pricing adjustments a little more even, so that people maybe with the lower credit score can have a chance? Or, really, what does this mean? And is this like the first time it's ever happened, in recent memory?
I think that Fannie and Freddie, so mom and dad of conventional financing, how I always like to explain to them who they are, they're trying to make guidelines a little bit more strict, right? And we saw this in the COVID era, right? We saw that things got a little bit more strict. But even more so, all of us across the board, because we all have to underwrite files and go off of mortgage guidelines the same way, are seeing the word variable income everywhere. So it's more so in the conventional world, heavily focused. And you believe it or not, most of us all have variable income. And I'm not talking about us as commission employees, but even our friends at Ford, let's say, we would do a lot of Ford loans up here in Southeast Michigan. It is very rare that a Ford employee works 40 hours a week.
So I was actually just talking about that today, especially as companies are doing layoffs. My stepdad retired from Ford, and I said there was a time when he would be furloughed for 2 weeks at a time, or for a month at a time, or through the summer, or different things. So, maybe 1 month he worked 40 hours a week, and the next month, he only put in 80 hours because he only worked 2 weeks, or, different things like that. So, yeah.
I think in my mind, Fannie and Freddie are just trying to become a little bit more restrictive, and that's not a bad thing, right? It's not a bad thing. But it's not for us. It just makes things a little bit more difficult, right? Because we're already combating a market with a lack of inventory. We're already combating rates that have went up so significantly. Now, I think a positive of that I have seen a lot more recently is that consumers are finally over that sticker shock of rates going up, because it was just a year ago that rates started going up.
Oh gosh,
Um,
yeah.
so I think now everyone that is still buying and still wants to buy is like, this is what it is. Understanding and having a good loan officer explain this is only temporary. You're typically only in a mortgage for this amount of time before you refinance, before you do this, that, or the other. So I think that sticker shock is fine. And that's why we're seeing a little bit like you and I and some of our counterparts are getting a little bit more busier, right? Because people are that fog is coming up a little bit and people are like, oh, okay,
Absolutely.
we're okay. But when it comes to loan level price adjustments, it's there's so many layers, right? And it's so above
Yes.
all of us. But I think the bottom line is that Fannie and Freddie are just continuing to be a little bit more restrictive because we want to caution. We just don't want to be, and we won't be, but go back to 2007, 2008, which we will never see that. We're not setting us up for our foreclosure era. It might seem like that, right? Because if you look at it, you're like, oh, now we're going to be giving houses to people with lower credit scores, or they're going to be better priced or whatever. It's
Yeah.
not going to be where Sally Sue has a 740 credit and Sally Sydney has an 800 credit score, and the rates are a point different. You know what I mean? It's not going to
Yeah.
be that sort of outrageous position where we're going to drastically award people for having poor credit. And that's something that
Yes.
needs to understand, needs to be understood. Um, it's just continuing to do what you and I do very well, which is educate our clients. You know what I mean? Be
Yes.
transparent and build that trust so that they can make the best financial decisions.
Yeah, exactly. And and it's one of those things too where like you and I have done so many loans together, and we've worked with clients who find that first house, the first house they go out, and like we literally work with them for like 30 days and boom. And there's clients we work with for months, and we know during that process things can constantly change, no matter what, whether it is the rate, whether it is the fees, whether it is even the price of what the builder might be charging. We might be under contract for one price. By the time it's done, there's an adjustment there to,
Right.
we've had clients like that too, who've had to come
Oh
out of
yeah.
pocket, for those adjustments, or whatnot. So, I guess and if this can be answered simply, who do you feel this will hurt the most, and who do you feel maybe it will help the most?
I think it's going to hurt anyone. I think at the end of the day
Okay.
that homeownership is one of the best things that we can do in our lives, right? It's one of our biggest accomplishments. It's the most positive investment that you can make in your financial future. So I
Absolutely.
think that we live in a world that unfortunately is full of fear mongering. We see it every single day, whether or
Yes.
not it's political, whether or not there's so many different things. You know what? We live in that world. Me and
Yes.
you talk about that on a personal level all the time.
Yes.
So I think that we need to take it out of our head that anyone's going to be hurt or anything else. I think that we just have to keep going forward with the positivity of home ownership, the positivity of being able to take that next step, right?
Yes.
Um, and sharing our own stories of, you know, 3 months ago when you bought your first place and that feeling of excitement.
Yes.
And I think that as long as we
Absolutely.
continue to be positive and not let the negative craziness around us that sucks us in so easily, like we just talked about Mercury retrograde, we got to move on, but we got to start staying in the positive and working with professionals like you and I that know what we're doing. Everything's going to be all right.
All right. Perfect. I appreciate you taking the time to just kind of explain it. Like I said, we would see, recently we would just see so many headlines about, just the extreme part of this. People with great credit scores are going to be charged more. People with bad credit scores are going to be charged a lot less. And for me as an agent and as a recent buyer, you as a loan officer, a lot of those things were giving a lot of buyers or people who were purchasing, say, FHA loan or with a score under 680 or 640, it felt like it was demonizing them for getting an FHA loan or maybe only qualifying for that. And what I don't want, as people who, do everything that we can to abide by the, fair housing laws and everything, I don't want a buyer who might not be in the market right now to fear going into the market because there's this energy, if you will, around whatever type of loan they may be able to qualify for, or feeling less than because of the type of loan that they might have. And as you said, there's so many polarizing things and that fear mongering. So somebody already might feel some kind of way because, hey, I only have 200,000 in FHA, and now feeling that, oh, okay, maybe if a seller or somebody's looking at my pre-approval, they might feel like, okay, this is not strong anymore because of those things that we're seeing. So our conversation, really, I just wanted us to just get across the point and like you said, letting people know there's nothing to be worried about. This isn't something that is meant to hurt people, and it's overall most likely is not going to hurt people. But everybody who has the ability to purchase a home in America should still continue to do
100%.
that and pursue
100%.
that.
100%. And we just have to keep focusing on the positives. You know what I mean? It's there's so many smoke and mirrors out there. There's so many, this and the other. But yeah, no, everyone should still focus on, it's the best investment you're ever going to make in your life. Truly. We're not in a market that is going to bomb. You know what I mean?
Yeah.
We're not seeing 2007, 2008. We just are continuing to work through the changes. And as long as we stick with it, all will be all right.
Absolutely.